Alright, so we're just gonna be trading on our phone today. On my phone today, I'm gonna show you guys how I trade. So as you see, I've already back tested a bit. I'm only placed maybe a handful of trades. See, I'm already $912 in profit. If you haven't seen my latest video, this one is a good video to watch. So let's continue price forward for a bit. And we're really not even going to be using any support and resistance or like anything like that. We're just going to basically use price action to determine what the direction of the market is, and just regular price action. We're not gonna include support and resistance. So let's play price forward. Let's go for a buy here. It looks like price is trying to continue upward. So 201.93, so around $200. And the reason why I drag out my stop loss first is because I want to see how much I'm basically using a one-to-one system. But when I drag out my stop loss, I'm basically trying to see how much I'm going to take profit for, which would be around the same amount. So it's around there. We're going to add in again to the support level. And we can drag this down to how much we're already down. So 125. If you want to, you can keep the same level. Just going to play price forward. And we're going to see where price is likely to reject that. Okay, around this level. So we're just going to wait on a good opportunity to add in again if we wanted to add in again, right? I think this would be a good time to add in again. We're going to drag this down to around break even. Okay, so this phone is so let's do that. Let's add in again. So we're down around 750, which isn't a lot. It's gonna keep continuing, and it's gonna go up. Went back down. Some people sold off. A nice little candle right there, down 1,300. See if we can try and get our break even. There we go. So we got our break even. Around break even for a $12 loss. As you can see, we only need to really be right one time. So we added in here, 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 here. And it pushed up to this area of resistance, and we ended up getting out. So let's sell. Let's just say we're at a resistance and we want to sell. Let's put our stop loss up here. Let's put our take profit down there. Let's remove that. And we'll add into the trade. Price makes, okay, so she didn't end up making that. She didn't have to go up there. We just sold at a resistance. Price moved in our favor. Let's continue the trend. Let's say we want our TP to be 137. We're just looking to take small wins here, small consistent wins. And if we go in loss for the same amount, then we will. There we go. That was a nice win. Took a while, but it was overall a nice win. As you can see, we're on the 15-minute time frame. So this works on any time frame that you want to trade on, but I like to trade on the 15-minute just because I like to see price action move. I don't like to wait an hour or 2 hours to see moves. It's just not my style of trading. But it doesn't really matter what time frame you trade on. It's all what you like and how impatient you are as a trader. So I'm gonna add in here, stop loss 81. So we can do the same. on the resistance here. And if it goes down to this level here, let's just put a nice little line right here so that way I know. If it goes down to that level, we're gonna add in again. All right, so that one is a win. Let's keep going. It's a little confusing here, but it doesn't really matter. I'm gonna take a sell. And I'll put my stop loss up there in 131. So I'm gonna do the same thing, 137. And if it goes up to this level, we're gonna be looking to add in again. So we're gonna add in. And this one, I think I'm just gonna keep it right there. I'm looking for a small win. Looks like it's struggling a bit. Almost came down to that level. It's very close. Yeah, we're gonna close this here. I mean, it's literally there. I don't know why the TP isn't hit, but it's literally there. So we're just gonna close that out. So I've gotten a few comments about this trading strategy being pretty dangerous. And I can completely agree that this trading strategy is very risky. But to be honest, trading itself is very, very risky. And you can only trade with what you're willing to lose. If you're only looking to trade, if you put your whole bank account in there, you're not willing to lose that, then I wouldn't suggest you trading at all with any strategy, because every strategy is risky. It just depends on how you manage risk. So how you manage risk could be, let's say you have $10,000 in trading capital. You only want to, that's your overall trading capital, right? And you want to try out a new trading strategy, or you just want to trade in general. Well, what you could do is fund an account with, or start another account with maybe 2,500 of that $10,000 in trading capital and just trade with that, right? Rather than just trading with the whole 10 grand and then losing the whole 10 grand just because you had one bad day or a couple bad days in a row, right? You know, so we never really know. I mean, this is back testing, and this doesn't really show future results. I mean, there's a lot of restrictions as traders that we go through, sometimes daily drawdown limits and drawdown limits overall in the account, which could very well hinder our success in the markets, right? But there's ways around that. I mean, if you want to just work a job for a bit and save up some capital, or work something some way, somehow, save up some capital and then fund your account, that way you don't have any restrictions on drawdown limits or how then you can very well do that. But again, the tolerance on how much you lose depends on the trader. It's subjective for every trader. Me, I know that my account is basically my stop loss, right? If I have $2,500 in trading capital, then for that account, then I know that account is essentially my stop loss, and I'll have another certain amount on the side to then fund it again, right? So, but then I'm using a small position size every single trade, so that if I have to add into the trade, it won't be a complete detriment, or fatally wounding account if it just keeps going and going and going and going and going against me, right? So if it goes into profit, you can always add into your trades, maybe add in another position. And if it keeps going, another position. That's how you increase your wins, right? So it all just depends on, how you manage risk. Managing risk doesn't have to be just in the trade. It can also be outside of the trade, and how you play the account, right? How you use the account. It doesn't just have to be, oh, I put my stop loss here and I put my take profit here and I walk away from the screen. No, it could be, if it goes into this zone, I'll add. Or it could just be like, you know what, I'm only going to fund this account. I have 20,000 in trading capital. I'm only going to fund this account with half of that. Or 1/10 of that, right? Maybe $1,000, $2,500 account. That's essentially how you manage risk. Managing risk doesn't have to be so black and white. Trading doesn't have to be black and white. So let's see if we can get to 2 grand here. I'm gonna sell again. Looks like it's gonna keep going down. Maybe it might reverse on me. We don't know. 137's all the way up there. That's why I'll be looking to add it again. So around here. So I want to add in again. So blew through that. And we didn't really get to add in, but we're going to add in again just because it had a higher high, a nice good looking candle. And then we're going to drag this down to here. But as you can see, even on a candle like that, because our position size is so small, even though it went all the way up, we weren't in an insane amount of drawdown. I mean, let's just say this was a $2,500 account. That drawdown wasn't insane, right? So, let's see here. It's going to keep going up. If it makes another high, we'll add in. So it's made another high. So we're almost at $1,000 drawdown. Just looking for a good spot to add in. So right there is cool. And what we're gonna do is look to get out break even. Or at least around break even. If it makes another high, then we're gonna add in again. So it's made a nice move down. I'm expecting a rejection soon. Why is it lagging so much? That's kind of disturbing. So it's made a decent move down and we got out of that trade. So, okay, that was a decent trade. I mean, we took a sell here, right? Around right here, we took a sell. And soon after, it reversed against us an insane amount. And all we did was add into the trade near the nearest support, or I just add a higher high, because we know that a candle like this is essentially going to lead to a good sell-off, right? And it did sell off. But it didn't sell off to our level where we wanted to get out at. Then it came back up. We waited, and then we sold off again. And it came down to support, back down to where we initially wanted to. So we have a buy 3 here. So we added in 3 times, ended up getting out 1 time, right? So that's pretty much the strategy. I mean, you know, it's very simple. You're just buying low, selling high. That's all you're really doing. As you can see here, sell 1, buy low. You're just buying low. That's all you're really doing. You're buying low, selling high, adding into, managing, not adding into. You don't have to add into the positions. That's what I'm trying to get people to understand. If you want to use a stop loss, then you can use a stop loss. If you want to hedge, then you can hedge. If you want to add in dollar cost, aka dollar cost average into your position, then you can do that too. That's one of my favorite ways to manage positions other than hedging. And my last favorite would be using a stop loss, just accepting the loss at a, and then just moving on. But me, I believe that price is going to reverse at some point. So, you can definitely get out. So I'm usually looking to manage my positions because I know that once I get in, price is usually going to keep going against, it's going to either go against me or it's just going to go straight to my TP. But I know that half the time, maybe 70% of the time, it goes against me and I have to manage the position. So I'm usually looking to find places where I can add into the trade or maybe hedge or something like that. But you can't hedge on TradingView. So that's kind of a downside. So I'm usually just adding into the position and using some sort of dollar cost averaging method. So as you can see here, we're just buying low, buy low right here, and selling high and selling high again. And buying low again. That's all we're really doing, right? And it's just a natural phenomenon in the markets. Eventually, you start to trade. You are the liquidity. And if this is not your trading style, or you think this is too risky, then no matter how much you fund an account with, then so be it. Learn support and resistance and fair value gaps and order blocks and all this other liquidity grab stuff. Learn that. and, with a 1 to 70 risk to reward ratio, and see where it takes you, trying to implement that into your strategy. Personally, I think it's too much. I think it's unnecessary. I think trading shouldn't have to be so black and white and follow a set of rules. If you think something is going to go up, then just buy. If you think it's going to go down, sell. If you think it's going to reverse here, add into your trade, or just do whatever you technically want to do to make money. It doesn't have to be so black and white. You are the strategy. Come up with your own strategy to make money. What works for me may not entirely work for you, but you can take some pieces of this video and implement it into your own, beautiful, and I'm pretty sure good strategy. Every strategy in the stock market or forex market, futures market, crypto is a good strategy. Every single strategy. It just depends on how you manage risk, and that's the most important part. So just for good luck here, I'm gonna place another trade. I was actually gonna sell, so that was insane. But I'm gonna place another trade right here. So you can see, boom, I placed a trade and it went against me. So my stop loss is here. Not my stop loss, but my invalidation is there, and I'm putting my profit for the same amount. So I'm just gonna add a line right here to just be like, okay, that's where I'm probably gonna add into the trade if it keeps going against me. At any moment it could just turn around and go straight to profit. So sell. I'm gonna push this up to 168. Let's see what it does. So some people are taking profits, and there we go. We got out at 168. Now we're doing, look, again, buying low. Even though this was us closing a position, we still bought here. This is just buying low, selling high. Buying low. And the next one, I guess, the next one, I bet you it'll be sell high some way, somehow. Right? It's just natural, right? It doesn't have to be so black and white. But I appreciate you guys for tuning in. Y'all stay safe and be easy. Oh, hold on. Let's fast forward this. Wow, win rate, 100%. 100% win rate. Okay, cool. All right, appreciate you guys for tuning in. Thanks.